Good afternoon, everybody, and welcome to our webinar, which addresses the theme of protecting your firm and your clients in changing times. This session is being recorded, so it will be available afterwards. My name's David Walters from PIB, and I'm just going to do a very brief introduction. We have observed during the last 12 months that many firms have taken bold and innovative steps to protect their businesses. It's interesting to note that right now, because of government bailouts and grants, that current company insolvency levels are at an all-time low, which is very encouraging. Of course, I think we all recognize that these financial buoyancy aids will fall away inevitably as the pandemic recedes. And it's at that point that we will begin to clearly see the benefit of firms planning on behalf of their businesses and looking forward to the recovery process. Today, to capitalize on that theme, we've selected 4 areas of potential concern to any businesses during a period of uncertainty, which I think we are clearly going through at the moment. And we hope to demonstrate how these can have a fundamentally positive impact on your business or your practices, or alternatively to be a very tangible benefit to some of your own clients. At the end of the session, the slides that the speakers put up will be available for you as well. In turn, the sessions follow these themes. Protecting your business in the event of death or serious illness, which will be led by David Skinner, our Head of Employee Benefits. The human aspects of business continuity. This session will be hosted by Gordon Stevens, a risk manager for business continuity within our own risk management practice. The third session will be assisting in the property and construction life cycle. Here, Fraser Pratt and Harvey will give an overview of some new and innovative insurance products that will enable you and your clients in the real estate sector to be on point with current trends. The final piece, and as if the pandemic has not wrought enough havoc, we do know that the insurance market has hardened considerably in the last 18 months, and I'm sure you've all felt the impact of that. And I think I would touch on in the final session, I will touch on some tips, some ideas around managing the hard market to ameliorate the more negative impacts and hopefully look to differentiate your businesses from the herd. So with no further ado, and at the end of the session, which is going to be approximately an hour, there'll be a Q&A session. So without further ado, I will hand over to David to look at the impact of death or serious illness.
Well, thank you very much, David. Much appreciated. Yes, as David's kindly mentioned, I'm David Skinner. I'm MD of our employee benefits side of the business. I'm also going to be joined on the call by my colleague Sam Lloyd. Sam's one of our senior business protection specialists within the business. So yeah, we're going to obviously talk about the happy topic of this, but it's very, very important to businesses at this time in particular. Next slide, please. So business protection has always been a very important matter for organisations, but to be honest, with the pandemic, it's probably never been as important as it is now. A lot of organisations protect their premises, they protect their liabilities, but a lot of organisations don't actually protect their most important asset, and that's their people. As you can see, this slide shows a survey that was done by Legal & General. It's an annual survey, and it's a broad brush survey. It was 5.7 million private sector businesses were surveyed. And actually, I think that's quite sobering what it actually says here, and it shows you the impact of not having things in place for a business to protect them. I mean, we are seeing this ourselves. I mean, only last week we had 2 instances of, sadly, 2 directors in different businesses passed away, and without the cover in place, both these businesses would have actually gone under. So yeah, this is real, and as I said, I think COVID has highlighted it even more, because it's obviously our mortality has been put more to question. So next slide, thank you, Anthony. The types of, I'm sure you're all aware of the types of arrangements in place. When we're looking at business protection, we actually look to really discuss and really understand with the clients all these areas, because actually they all complement each other. As an example here, shareholder protection fulfills a very different purpose to key person cover, as for example. So shareholder protection, as you are aware, have been solicitors. You know that it's a policies in place so that the money can then go to the deceased family, and then shares can be passed over to the other directors of the organisation. While key person cover, for example, obviously make sure that there's a substantial sum of money there in place to help the company weather the storm and help them to trade effectively during that stressful time. The area of interest in the area of relevant life cover, which we sometimes kind of joke about as being almost like a no-brainer for directors, is that because a lot of directors actually still have their own personal cover in place, which they pay out of their own personal account, which is obviously after they've paid relevant tax on that money. So obviously relevant life cover is, as you'll probably know, a lot of you, is a death in service, individual death in service plan. But the big thing here is it's very, very tax efficient. So it's tax deductible by the business, and it's also not a benefit in kind for the individual in question. So what we find is a lot of organisations don't have that set up, especially directors' organisations, and this is something they should really consider doing to make it far more efficient for them. And the good thing with it as well is if they ever leave the organisation, then they can basically turn it into a personal policy for them as well. So they are flexible as well. But as I say, we don't discuss each of these in isolation. We discuss them together and make sure we understand what the organisation's trying to achieve in the first place. So next slide, please. The importance of having a specialist, I think this is more and more, this has become important. And within our own organisation, within PIB, we have our own specialist business protection team, and that's all they do. What we're finding is that when we are reviewing policies, sadly we find that a lot of them are not been set up correctly in the first place, which is, it's not a big issue at the time of setting it up, because it's only obviously when something happens, the last thing the family or directors of the business need is to then find out that the business, it wasn't set up correctly and the proceeds or the valuation was incorrect in the first place. So again, relationships with yourselves, solicitors, is vitally important to us to make sure that we work closely with you to make sure the right documentation is in place and the correct trusts and level of covers are in place for our clients. So yeah, I think Sam, who I said has joined us, is just going to give us a couple of examples of that as well. So pass to you, Sam.
Hi, nice to see you, meet everybody. Yeah, just a quick one, a real life example that happened to me last year. I picked up a client that was going through a 2-year court battle as a result of the shareholders agreement being set up, where the I's weren't dotted and the T's weren't crossed, I guess. So in this instance, this was set up by a larger national accountancy firm. So this is what routinely happens. I think the majority of cases I see that have shareholder protection in place, there's some element of it that needs adjusting. And in this case, it was around the valuation method. So what had happened is the accounting firm had gone in, spoken with the directors. They'd all agreed that their shares were worth 1.5 million, or that they wanted their wives to have 1.5 million for their shareholding. Unfortunately, the accountancy firm didn't sort of sit down and work with the solicitors that were involved in drawing up the agreements. And in the cross-option agreements that were in place, the valuation method stated that the company would be revalued on death. When that happened, that shareholder died, they valued his shareholding at 580,000. So this meant that the 3 surviving shareholders received 1.5 million, but legally they only had to pass the wife 580,000. Now she was expecting 1.5 million. They'd all agreed on 1.5 million 2.5 years previously, but obviously the additional £920,000 was a big draw for these 3 guys, even though they'd been friends and in business for 15 plus years. And they tried to get away with giving the wife 580,000. This resulted in the wife taking the company to court and ended in a 2-year court battle. So actually, this agreement had caused more problems than it was worth for this company. And we went in and sorted it out properly, put a fixed valuation method in, working with the solicitor correctly, making sure that the policies that were put in place would always match their liability, with the caveats that they were going to review their valuation methodology on an annual basis. And if anything needed changing, we could take out additional cover for them. So that's just one example, and I see it. There's that list you can see on the screen there. It's wrong a lot of the time, and a lot of it is because they don't involve solicitors properly. I always, when we're dealing with this, I want to speak with the solicitors involved, making sure that we're in agreement on the cross-option agreements, we're in agreement on the shareholders agreement, make sure the articles are checked. There's a real way for you to not only advise your clients and get things done properly, but also a way for you to make fees as well, I think, as you're giving the right advice and making sure the legal agreements are airtight. So that's just one example for you there anyway. Back to you, David.
Thank you, Sam. Can I have the next slide, please, Anthony? Well, I don't have to tell you the many issues of COVID-19 has given to everyone in the market. I think from a business protection, it's also had a big impact as well. And I think what we are finding is that the market's evolving every day. So it's something that we have to keep really up to date on. And a big thing to make sure that we manage client and provider expectations is making sure that when a client approaches us, we package the proposal properly. And we really spend time understanding somebody's health, any health issues they've had, levels of cover they need, so that we can actually package that correctly to the provider so that the best outcome is given to the client. The worst thing a client needs is to then wait weeks and weeks and weeks to try and work out what's happening and then waiting for tests, things like that. So it's important that we manage the expectations on it. As you can imagine, obviously with COVID, a lot of routine tests and operations have been delayed as well. So we spend a lot of time really working with insurers, working with senior underwriters to managing the whole process. And in fact, I think the market's come on quite a lot. So we'll then think of ways of actually getting around it in a positive way. So maybe splitting different insurances around the market so that you don't have to go for such a large number of tests, and tests that can be done quite in a more straightforward manner as well. So it's just been on the ball with it. What we've also noticed that providers are becoming a lot more flexible as well. As you can see there from it, that there's a big introduction now of immediate cover availability in the market as well. More and more providers are coming into the market in the last few weeks as well, so that people can get cover while they're being underwritten as well, which is very important because it takes the immediate strain of trying to get all the necessary tests done, but it gives us time to make sure that we can get cover. So this is not going to go away anytime soon. As we know, there's going to be upheaval in the market while we all try and deal with the pandemic, but we're certainly adapting and adjusting to where it's going with it. So yeah, if you could, next slide, thank you. So what we've just put down here is some of the key questions we ask clients to try and really understand what they're trying to achieve in the first place. And I'll just pass back to Sam, because obviously this is what Sam does every day, just to kind of cover off briefly some of these areas.
Okay, so your clients will fall into 2 camps really. People that already have arrangements in place, and this is a really positive thing. I know that the majority of arrangements out there, especially with shareholder protection, there's an element of it wrong. And the good news is for your client, if they've already agreed to have an arrangement in place, they're already funding it, it's something that's already important to them. And all we're trying to do is make sure that it's airtight, make sure the I's are dotted, the T's are crossed, the agreement, and we PIB and our solicitor friends can work together to make sure that's right. And often we're not asking them to spend any additional money. So the questions around that, the initial question is just to find out, do they have something in place already? And if the answer is yes, you know, all we want to do is go in and have a look at it and make sure it's right. So it's just simple questions. Are you confident the correct legal and taxation processes are being followed? One of the big ones is, I would say in probably 50% of the cases I see, the correct P11D taxation isn't being paid. And that's probably due to the fact they haven't carried out what's called an equalization of premium process, which is very simple. It's just a step that often gets missed. So the first step is just find out, do they have anything? The same with key person. If they've got something in place already, a lot of the time I go into companies, they're paying for policies for people who've left. It's something they do years ago and they just keep paying it because it's a small premium coming out of on a direct debit mandate that comes out every month. They don't really know what it's for. So it's just understanding, have they got it in place? Start to ask some serious questions. You know, what would you need to do if you weren't here tomorrow, if you got knocked over by a bus? It's all very simple stuff, and the relationships you'll have with your clients, you'll just be able to have an open discussion with them. Finally, the loan protection stuff, pretty simple. Do they have any directors' loans? People don't realize it's a legal requirement to repay directors' loans on death, and some companies don't have the means to do that. So it's nothing that's taxing. It's just asking some really simple, open questions to understand what they've got in place. If they haven't got anything, whether they'd be interested in having a discussion around it and what the impacts of them not being there would be. So, you know, the questions are very simple. It's just trying to get that understanding, I guess.
Thanks, Sam. And as Sam's already alluded to, as part of the supporting, we would be delighted to have a chat with the individuals in question, and we offer a free audit for what they currently have, and if what they've currently got in place is fit for purpose, we just simply tell them keep with it. But as Sam's already mentioned we find in a lot of occasions where there's things that can be improved. Businesses grow, businesses change. It's important that it's like this, anything that we adapt and make sure the policies are aligned to their needs. So yeah, so that's us from obviously the employee benefits side. So I think I'm going to pass over to Gordon Stevens, if that's okay. You're on mute, Gordon.
There we go. Just thank you, David and Sam, for your comments. So just over the next few minutes is really just to touch upon some of the areas of business continuity, which again has come to the forefront due to COVID-19, and some of the organisations have experienced a variation of disruption. But just some of the touch points as we go on to the next slide, please. Some of the areas that I'll be covering off is just to give a little bit of a summary on the human aspects of business continuity and some preparations and arrangements that can be made in advance, but also the important factor is looking after staff as part of the overall process, even after the incident is all finished. Now there's a quote there in the bottom right hand corner, which is true in the sense of where staff feel obviously loved, but I don't know if that's the right word, but where they feel valued, that their motivation and their morale will also assist during a business interruption. Next slide, please. So causes of business continuity disruptions can vary in terms of natural disasters, which can cause a disruption to premises as well as individual homes. So you've got storms, flooding, etc. Now we've had a couple already, one in January with Storm Christoph, and then Storm Darcy in February, which have caused some displacement of businesses and homes. Technology is another issue, whether it's a loss of key systems that's in place, or also around cybercrime, which seems to be on the forefront at the moment as well. And that can be through to educating staff around phishing in terms of email that comes through with links that people click on accidentally and downloads information or ransomware onto the system. Also, the working environment may cause a disruption in terms of a health and safety incident, or potential loss of a building. Staffing issues, as David mentioned earlier, the loss of key individuals can cause a disruption to the business, especially if there's no succession planning in place or handover procedures to follow. Staffing issues can also cause problems throughout the COVID experience. Many organisations have had staff which haven't been able to work at full capacity, where they've had to juggle home life with a work-life balance. But again, it's looking at ways that they can be addressed and looked at. And also acts of terrorism, which, when reflecting back of 2005, where there was the central London bombings, which had a significant impact in the death of many people, but also injury of over 700 people because of that. And that was on a busy commute place to and from work. But as we touch upon some of the slides in a moment, we'll cover off some ideas and some suggestions that you may want to consider and put into place, not only for yourselves, but maybe potential thoughts to clients as well. So, in a nutshell, you've got business continuity disruptions, some of which are harmful to individuals and people, and some of which are harmful to businesses. And there is a crossover where both can be put into place. Now, you may want to have an opportunity to do a risk assessment on some of your business continuity interruptions, some of which you may think, well, yeah, we can tolerate that and accept the risks that we are faced. But also some can be transferred to another entity, i.e. such as an insurance policy to cover cybercrime or to cover a loss of a key person. Next slide, please. So just a touch on the overview of the human aspects of business continuity. The first point links in with your health and safety duties, in terms of that the organisation, it does have responsibilities, including a duty of care to members of staff. Now, good practice within business continuity is to carry out a business impact analysis to understand what your important business activities are, what processes are that sit behind that. But also in terms of the business continuity plans, you may have personnel or people listed within that plan. And along with that, there is some assumptions really regarding that the ability or even the willingness of your staff will cooperate in accordance with your business continuity plan. Now, in terms of the business continuity incidents, as I mentioned before, they can be varied, and it's difficult to predict the human response following an event. So where we may touch upon a fire alarm going off, or a terrorism activity that's going on outside, people will respond and have different thought processes to others, and it's trying to understand and control how that will work. Now, the ability to communicate with staff is key, and that is having the processes in place in order to do that. Now, if you think of how your current communication links may work, whether that's through a cascade process or a social media interaction, if a key member of staff who is responsible for issuing them communications is not available, then potentially there's a gap within that process, and it's looking at each through it and having succession plans or deputies in place in order to do that. Now, there's three main areas in supporting human response to a disruptive incident, and as we go into the next few slides, these are some of the areas that I'll highlight and give examples of as each time we go through. So staff wellbeing, communications and supporting services. Next slide, please. So under pressure, even the most effective people managers can neglect the basic courtesies. If you're dealing with an incident, there is some uncertainty, there's some ambiguity, or key personnel have been affected by that incident, then there is a pressure where staff are looking at their leadership teams for guidance and support to do that. Just thinking of an example, I mean, I touched upon the London bombings in 2005. Just a couple of weeks prior to that, I was involved in supporting with a desktop scenario exercise which involved a terrorism event in Bristol, and that management team were doing their best and maybe thought it was a bit extreme on some of the things that were being posed to them. But as the scenario unfolded and they dealt with that, what little did they know is that 2 weeks later they were actually dealing with the real thing, as some of their offices in London were impacted by that terrorism event. So don't underestimate the opportunity to have opportunities to sit down and discuss the business continuity plan with incidents that could occur, and to risk assess what incidents may occur. Also, they're looking at the protection and the provision of arrangements and accounting for staff. You may have that in place already, but it's just seeing how robust that is. So, if staff are out and about at lunchtime and something happens, can they report back to say that they're safe and well? And also their next of kin details to encourage them, your staff, to proactively provide this information. Now, this may be done as part of the recruitment process and onboarding, but it's making sure that that information is available and can be accessed out of the office environment. Next slide, please. Arrangements to support people and your staff throughout the continuity period. And I just want to give a little example. As an organisation, you may be well rehearsed in building evacuation, where you leave the building and you may have specific points where staff will gather and you will do a head count just to make sure that everybody is there. But just thinking of office locations, whether they be in a city centre where potential terrorism activity may occur, or whether it's a serviced building or a shared premises, what would be the response in the event of an evacuation where you're moving staff internally to keep them safe from dangers which are outside of the building? That might throw a little bit of a challenge, because that's very rarely that that is rehearsed or looked at on an internal organisation. But looking at, in terms of both of these opportunities, it's ensuring that staff personal belongings can be secured, and also management are aware to look out for early signs of stress. The communication channel needs to be two-way to understand and to help management understand some of the concerns from the staff. And as I mentioned earlier, some of the key areas as well is where you've got key individuals or key roles to identify training opportunities and deputies to have them in place in order to do that. And a couple of other areas, importantly, is to make sure staff can be paid during a disruptive period as well. Next slide, please. So in terms of support for staff and after recovery, it's important that management are active, informed and present. And that is that they're there visibly and they're working alongside the staff to help them to recover that. Because there may be some anxiety in terms of worry of loss of jobs, in terms of their family responsibilities, or if the company may potentially collapse due to a breakdown in partnerships or partnering organisations. In terms of, again, communications, the internal policies and procedures that you may have in place will support and help and communicate them out to the staff and to the workforce. And the final point really is just about the support services and having them available, because I think if you look at COVID, there'd be a high intake in terms of occupational health services, bereavement services, and also counselling. And I'm sure some of these may be outsourced as well as other organisations, but it is important in an area to look at in terms of supporting and helping the organisation. But hopefully that will summarise a little bit of information for you in terms of the business continuity and the human aspect. And just want to pass on to my colleague Fraser for the next part of the presentation.
Make sure I'm unmuted. Good afternoon, everybody. My name is Fraser Pratt, and I'm the head of property and construction at PIB Insurance Brokers. As a brief introduction, I just wanted to give you an overview of the property and construction team and hopefully give you a better idea of how the business is structured, where we can provide assistance to our solicitor partners and their clients. So the team is split up into three distinct areas. Dealing specifically with transactions, construction and real estate business. As you can see from the slide, the next slide please, and so as you can see from this slide, we've considered each aspect of what we consider the life cycle of property ownership, beginning with acquisition of an asset and the risks that come along with that, be that warranty indemnities, title insurance, etc. Through to the development phase and dealing with risks, construction risks, rights of light issues, housing warranties, or any of the other vast array of issues that can arise at this stage of property ownership. From here, we move on to the more traditional real estate and property insurances focused around property ownership, but also utilising other strengths within PIB, particularly around risk management solutions. Finally, we can also assist when it comes to the disposal of property, either wrapping up against title or warranty issues again, or considering ongoing litigation disputes which may be holding up a sale. I think one of the key points of difference that we try to focus on as a team is the creation of unique insurance products and the solution and solutions. And it's two of those that myself and my colleague Harvey will go into in a little bit more detail next. So the first product I want to talk about is one that is exclusively available through PIB insurance brokers, and this is security for expenses insurance. So it's fairly unique, a fairly niche product, but to explain a bit more about it, as most of you will no doubt be aware, a party wall award is required when a dispute arises between two neighbours about proposed works to be undertaken on a property that will potentially impact a shared wall or a boundary. The building owner, so that's the person that owns the building where the works are being undertaken, and the adjoining owner, which is the neighbour on the other side of the wall, will then appoint specialist party wall surveyors to act on their behalf and ultimately agree an award under the Party Wall Etc. Act 1996. Now, there are many, many different parts to the Party Wall Act, and probably at least another 100 more hours of webinar time if you wanted a party wall surveyor to go into each one. But the part that we're concerned about, and this insurance product is concerned about, is Section 12. Section 12 of the Act, the adjoining owner can request that a building owner provide security for expenses. Now, typically, this is a sum of money that is set aside to deal with the completing of the works. If they're abandoned, for instance, the building owner, contractor go bust or run out of money to complete the works, or if there's unrepaired damage that hasn't been dealt with by the building owner or their insurers. Traditionally, security for expenses has been a sum of money held by solicitors or by escrow agents, but under stricter client money rules, many solicitors now are unwilling to hold the money for this purpose, and escrow agents can be an expensive alternative. So next slide, please. So where does security for expenses come in? Well, security for expenses product has been designed to specifically replace the need for money to be held in the escrow account. So it is a policy that is in the adjoining owner's name. Therefore, it affords the adjoining owner direct protection by the insurance policy, but is paid for by the building owner. So again, there's no cost to the adjoining owner in that respect. I think I need the next slide. So triggers for loss under the insurance, and this was a critical point when we put together the insurance, was to ensure that the insurance policy didn't encroach upon the way or the manner that party wall surveyors administered the Act. So the trigger for loss under the insurance policy are the same as if they would be for releasing money from escrow. For instance, 2 of the 3 surveyors named in the award agree on the sum of money to be released, make an award under Section 1010 or 1011 of the Act. This is then submitted to insurers for payment. There is no loss adjuster to determine the claim, and the insurers rely on the advice of the surveyors involved in the award. Now, at this point, it's important to understand that it is a requirement of the cover that the building owner and contractors maintain appropriate insurances for the works being undertaken, which may also include, if appropriate, non-negligence cover. The security for expenses insurance is not designed to replace any other of the usual insurance policies or the building owner's responsibility under Section 7 of the Party Wall Act to make good all structural or decorative damage to the adjoining owner's property. If a claim is paid out to the adjoining owner and is subsequently revealed that the building owner had other insurances in place that deal with the damage, the security for expenses insurer will likely subrogate against the building owner's insurance policies to recoup their losses. Overall, it's a fairly straightforward product, a direct replacement for security for expenses in escrow. And in saying that, obtaining a quotation is a relatively simple process. The building owner provides provided that each surveyor has a minimum of 5 years party wall experience and carries at least £1 million worth of professional indemnity insurance cover. The building owner just needs to complete a short proposal form. We will then undertake a credit check on that building owner, and then normally we can obtain terms within 24 to 48 hours. Premiums start from as low as £250 plus insurance premium tax, and can be provided for security requests into the millions if required. The policy is, as I said, was designed originally to take the pressure off a building owner to have to find additional monies to hold in an escrow account, but fundamentally is a policy built around protecting the adjoining owner, so therefore providing the same amount of cover or the same cover that that escrow account would ordinarily do. So I hope that gives you a little bit of a taste of this unique product. And I'll be happy to answer any questions at the end of the seminar, but for now I will hand over to Harvey to discuss planning costs insurances.
Hi everybody, thanks Fraser. Yeah, I want to talk about planning costs insurance with you guys. Recently launched the market last year after about 3 years of development. But as a whole, the market's been asking for something like this for far longer, so we're really happy to finally be able to provide it. Next slide, please. So the policy itself has been designed to cover the planning expenses of a developer should their application be refused by the local authority. Now, those costs include preliminary site investigation fees, planning fees, through to architecture fees, surveyor fees, LPA application fees, market research, and of course, your legal fees. Now, the premium works out at about 10% of the the limit of indemnity, but can go up to about 20%, but I haven't seen that yet. Usually they're around the 10% mark. Next slide, please. So what are the main 3 reasons why people are using this policy? So first one is balance sheet management. 86% of planning applications in the UK are actually successful. However, up and down the country, there are a number of areas where applications are, the application rate is successful rate is much lower. So somewhere around sort of 60%. So you're looking at a 40% exposure. So with that, and the premium being 10% of the limit of indemnity, our developers and clients are using it to insure all of their developments, and therefore improving their exposure rate from 40% potential exposure to a 10% rate, because the premium is 10%. So it's just a balance sheet management and improving your efficiency, essentially. Secondly would be maximizing potential of a site. We have a client at the moment who is a solar farm developer. They're developing a large area of land on the Greenbelt. What they're doing is planning consultants said that they can develop up to the maximum extent. However, because they're a risk-averse sort of company, they wanted to reduce the massing of what they're developing in order to get planning. We've worked with them to produce a policy which gives them the comfort they need in order to develop the maximum scale of their development. Therefore, maximizing the development and maximizing their profits, which is the main reason the policy's been designed. Thirdly would be improving financing terms. Now, it's notoriously difficult to get financing for pre-planning costs. A lender may ask for equity in the development or apply a higher rate due to the high risk nature of the lending. What our developers and clients have been doing is taking that policy, approaching their lenders, demonstrating to them that the policy provides them and their financing with protection, which then allows them to either negotiate a better rate on the finance, or in a lot of cases, they've been able to shift it away from equity lending just over to debt. And in other cases, they've approached lenders who previously didn't have an appetite for pre-planning costs, and therefore used it to improve their comfort and open up new lines to that developer. So those are the main 3. I mean, individually they all prove beneficial, but as an amalgamation of all 3 together, a lot of our clients are finding it as a no-brainer and applying it to all their developments. Next slide, please. So points to consider: there is an obligation to appeal. So should the application be refused, We will require legal advice to see whether an appeal decision would be at least 50% likely. If so, then there's an obligation to go to appeal. But if the appeal decision the planning is not awarded, then all of the planning costs plus the appeal costs will be reimbursed to the developer under the policy. Secondly, is an application to go to appeal. Yeah, so the insurer is comfortable with assessing decisions or considering decisions where a application has already been refused but not insured, but they're looking to go to appeal, and then we can insure that decision. And should the decision appeal be rejected, all of the planning costs plus the appeal costs will be reimbursed. So if you do have a case in the moment where application has already been refused and they're looking to go to appeal, we can add and provide an added bit of comfort there. And thirdly, judicial review. Just wanted to mention that because a number of our clients are taking out judicial review insurance in conjunction with the aborted planning cost product, because we're looking to, give them comfort on the original decision and then ensuring that they maintain the application and the decision once it's been awarded. Next slide, please. So from us, in order to consider it, we have a proposal form which asks for all of the information that the underwriters would need in order to consider it. I can send that round to everybody, but in essentially they look for planning consultant report, development plan, pre-app, if any, at that stage, and finally the limit of indemnity, so the maximum exposure you need insured. I do have a product card, which I can also happily send around, which has all the details we discussed today, but more, and my contact details should you have any questions or want to send in an inquiry. I'll pass back over to David Walters.
Thank you. Thanks, Harvey, and thanks everybody else today. We're tracking well for time. The final piece of formal presentation really is around trying to achieve best outcomes in a hard insurance market, which I am sure those of you who are managing businesses are aware is a trend that we have been going through for the last couple of years. Normally and traditionally, the impact of a hardening market would be increase in pricing, breadth of coverage will be reducing, and of course it is very difficult at annual renewal time when perhaps you've undercalled the budget number, which is always a problem for continuity management, frankly. We are aware that certainly in the marketplace for lawyers PI, pretty much minimum premium increases have been 20%. Certainly that's an average that we've seen across the piece. For management liability, certain insurers are already on record as having said that the minimum rate increase that they would require to renew a management liability policy is 100%. And in extreme cases, we have seen 600% plus. For management liability for lawyers, we have seen underwriters trying to strip out employment practices cover. And of course, it's that diminution of cover in a hard market, along with the increase in premium that is of concern. In the M&A market, the warranty and indemnity market, we are now starting to see a capacity squeeze that hasn't been visible for the last 2 years. And so securing warranty and indemnity rating for transactions is starting to become a little bit more challenging. So given that rather depressing outlook, how best to buck the trend and differentiate yourselves? In my view, there are disciplines that are available to, as I say, minimize negative outcomes and create less broken play in the market. The first piece of advice I would give is engage with your insurance broker in a timely manner. Certainly around renewal. I would suggest that any big major renewal or a renewal that is fundamental to your business should be addressed at least 3 months before renewal date. One of the impacts of COVID has been to significantly alter the way that the insurance market engages with each other. So if you imagine, there is no longer an insurance marketplace in Lloyd's of London, so that face-to-face element has gone. The meetings that brokers hold with underwriters are now online. It is taking longer to generate quotes. So getting your risk to the top of the pile and getting the maximum attention on it is absolutely critical. I think you should definitely seek to differentiate your business from others. And you know, underwriters are sitting on huge piles of submissions at the moment. So how do we differentiate? Working with your broker to produce a great market presentation is essential. Demonstrating how you may have enhanced governance, how you embed the governance in your business is very, very sensible. Underwriters inevitably will be asking questions around COVID responses, how COVID has impacted on your financial performance. Having those answers ready and proactively given to the market is essential. And also a commentary around financial performance. As we alluded to at the beginning of the presentation, there is, as we know, a lower insolvency rate right now, largely occasioned by government grants. All pundits seem to be predicting that that situation will come to an end as the pandemic recedes. And so commentary around financial performance and how you interact with banks, etc., is going to be very important. I think offering to meet insurers at the moment virtually, of course, is important. If you consider your relationship with your underwriters, I realise that sometimes underwriters can seem intrusive in the questions that they ask around your business. But in reality, they are stakeholders in your business. If something goes wrong and you require defence costs, you need media costs, you're going to want those costs to be paid very, very quickly. So in essence, if there is a significant claim, we know that underwriters' response is vital. So they are, in a sense, a stakeholder in your business, and advice is to treat them as insiders. Bring them on side within the business. That is absolutely vital. It's interesting to note, excuse me, that the recent decision around the kids company, the defence was funded by management liability insurance, and I think that's a pretty impressive testament to its efficacy. A focused approach in the insurance market is essential. Scattergun approaches are not necessarily best, and I think working to really figure out who the markets that are going to be receptive to your type of risk is essential. So focus, because not all underwriters like the same type of risk. And so matching your risk appetite with underwriters' risk appetite is a key discipline. Understanding how the market looks at any point in time is the market dynamics on pricing and coverage is very important. So as you report back to your peers on likely cost impact for a renewal in perhaps 6 months' time is essential. So keeping contemporaneously updated is a key skill. And the final thing I would say is be as proactive as possible around the insurance piece. Despite the fact that the renewal process can be seen as difficult, time-consuming and wearisome, going at it in a proactive manner is, I think, essential to securing the best possible terms from the market. Now, we have, thanks to everybody, managed to stay very much on time, but there are some questions that have been posed. And I believe Jane Jones, who is on the panel, is ready to address a couple of those. Is that okay, Jane?
I think it was more that I was going to pose the questions for you and you were going to address them, if that's okay.
Well, that's fine.
So the questions are, for the benefit of those listening, that the legal profession seems to be getting the brunt of the hard market conditions across PII, management liability and cyber covers. And the question was what law firms can do to improve insurers' perception of their business to get the best from the market. I mean, I think you probably feel that perhaps you've answered that in your presentation, but is there anything you want to add to that?
I don't think that. Yes, I mean certainly the legal profession has been impacted by market deterioration, and I suspect this will be cold comfort, but not as badly as other sectors of the financial services industry. So if you look at financial advisors, if you look at fund managers, they have been impacted massively as they are seen to be high risk areas. Also, and unusually, commercial D&O accounts have been very badly adversely impacted. The root cause for that is not perhaps anything that they have done themselves that is detrimental. I think a lot of the answer to that is around underwriting methodology that's been applied for the last few years. I think we all know that pricing has been undercooked, coverage has been exceptionally broad, and of course, if you juxtapose that with an increase in regulatory actions, an increase in insolvencies that has been trending for the last 5 years, you've almost created a perfect storm. So there is a market correction, and unfortunately the legal profession have been caught up in that, but it is not to the same extent as everybody else. As a final point around that, we are starting to see some evidence that the market correction phase that we're going through now is starting to slow down. And certainly I was talking to an underwriter that provides management liability insurance, and he was saying that he may well be able to look next year at rates that were perhaps flat or with single digit increases, which I think frankly would give everyone pause for relief.
Thank you, David. So I think that also answers the question about any thoughts on how long the hard market is likely to last. So hopefully, you know, we'll see things changing sometime next year. Do you think we're moving to a softer market at any time soon?
No, I don't. I think you know, history teaches us that in the last hard D&O market we had was in 2001, and at the time underwriters said that they were never ever going to go into a soft market cycle that would provoke a knee-jerk reaction ever again. Well, look what happened. So I think yes, the rate increase will decrease, but I think going into a soft market where many insurers have been impacted and withdrawn from the market would be probably a prediction too far.
Thank you. And the last question that we have at the moment, and if anybody does want to pose any questions, and there should be a Q&A button at the bottom of your screen, so you can ask questions that can be answered live. But with market conditions toughening in the way they have, many firms may have to consider a merger or acquisition. Is there advice or guidance that PIB can give to firms that are considering this option?
Well, yes, there is. I mean, it's it's diligence, doing a lot of diligence. And you know, we're seeing a lot in the insurance industry of aggregation firms merging with each other, and I just think it is you know, again, it's proactivity. There are lots of opportunities out there, largely occasioned by market conditions, and I think diligence and proactivity would be the answers I would give.
Thank you.
Okay, well, we are only over budget on time by 2 minutes, which I think is pretty good. And if there are no more questions, thank you very much to all of the panelists for preparing and presenting. Thank you all very much for participating and throwing up questions and staying with us during the call, which is fantastic. Any further questions that you've got, then we can address in follow-ups with emails or slides, etc. later on. So thank you very much, and thank you for attending.